Hello everybody, welcome back. So today is the day, the Fed meeting, the rate hike. What's it going to be? I think a lot of people are expecting 0.25, and I think with what's going on in Ukraine, the Fed they're walking a very fine line because they need to make sure that our stocks and our economy doesn't look particularly weak despite inflation just getting out of control. Was it 7.9% right now? Almost guaranteed to go higher. So we were talking yesterday and I suppose over the last week or so about how markets price things in. The inflation wasn't high here, although the markets priced in the inflation prior to the inflation running high. The last report, only just recently, was 7.9% in America. All currencies suffering major inflation, and we're going down as a result. We're supposed to go up. Isn't inflation supposed to be good for Bitcoin and other assets and things like that? Well, yeah, it's supposed to be, but the market's priced things in, including the rate hike, which has been priced in probably, I'd say, since around this particular level, around 50,000. So that's all been priced in on the downtrend, not just for Bitcoin, but for Nasdaq and stocks and all kinds of stuff. This is your Nasdaq here, and we saw that yesterday we started to move up a little bit as a result of people anticipating the inevitable, what would appear to be 0.25 basis points that the Fed are going to agree to today. Now, the reason this is particularly, I wouldn't say bullish, but it's having a positive reaction on the market is because the market's largely priced that in. In fact, I think that the market is priced in a 50 basis point, now with what's going on in Eastern Europe, the 50 basis point would probably be a little too high for what would appear to be a struggling economy, a global economy, and so they're gonna give it the light touch, I think, and I think that's all pretty much agreed. So with pricing in what I think would have been a higher rate hike, we're going to see some upside. But the one thing that we can guarantee over this week, or especially today and tomorrow, is volatility. We're already getting some of that now. So yesterday we started to move up. Today, well, overnight we pushed up all the way up to 41,700. Couldn't take it though. We take this down to a smaller term time frame. We can see how dramatic these moves have been. So pushing all the way up, all the way back down again, and now we're dragging our feet to try and get back above that $41,000 zone, which is a nice, straight, flat, horizontal level of significance, dating back all the way to this top, to these resistances, to this support, and then this meandering, well, almost a triangle formation, to be honest with you, and breaking above that 41,000 would be nice for us, because then we can have another run at the 200 exponential, and reclaiming that gives us every opportunity to push back up into the $50,000 zone. But for the moment, it does look more or less anyone's call, to be honest with you. And like I say, the best thing that we can agree on is volatility. So, bots at the ready. Get your bots set up, because they will enjoy the volatility either way. And the direction is yet to be decided. Now, if we go back to the 4-hourly, it does still look very much like an accumulation, because we're above the moving averages, we're below them, above them, below them, above them, below them, and volatility is diminishing. Bollinger Bands are pinching, and it would appear that there is likely to be a bit more of a savage move take place at some point soon, making the direction a little bit more obvious. Looking down here, though, we are turning up nicely on the MACD. We're also turning up on all these oscillators. The volume is increasing as well to a nice extent. So there's more money coming back into it. We can also see that on the weekly here, turning back up ever so slightly. No real cause for concern on this on the RSI. Effectively, just showing us what the price is doing. So no real worries or anything there. And if we think about what we see on the 3-day, we've got 3-day actually turning up very nicely, looking like it wants to potentially go up. We've got snaking up of the money flow index, snaking up of the RSI, and snaking up of the MACD. So being at this particular level with these kind of reads does make it feel quite opportunistic, really, that outside of the volatility that we're going to get today, we might have a pump, we might have a dump, and then we might have a building block to start to reclaim some of these zones, starting with reclaiming this major area here, which obviously that's going to be your 200 exponential within the daily, but also this major zone which ends at 45,000, more or less 46,000. that would be a major area for us to start to build upon, and actually go on to maybe creep up to all-time highs. Now, I'm not here to sell you any kind of hopium. Like I say, the only thing that's guaranteed right now is volatility. The reason the rate hike is such a big deal is because it gives everybody a little bit of clarification as to how we can actually start to play the market. People want to play the market, but with massive uncertainty, it makes it harder to do that. We've got all this stuff going on in Ukraine. That's uncertain enough. We need market participants. That's what the Fed want. The Fed want people to get back in. A healthy market is a healthy economy, or gives the gives the impression of a healthy economy. So, and that's what they want. And they know that there's money on the sidelines waiting to go in. They know that it would potentially be a good opportunity to buy in at these relatively sold levels across the board, not for crypto and altcoins, but for the general market. Some of these things are down 50% or more. And if we're thinking about buying and investing for a 3-year period or so, even blindly buying in now should be okay, for a 3-year opportunity on some of these major tech stocks or general stocks anyway, unless it's an absolute pile of absolute crap. So they know that, and we all have money. We want to get in, and in fact we want to get in more now than ever, because we know that inflation is destroying our tether, our pounds, our euros. We want to put it to work, but we're stuck between a rock and a hard place, and the Fed know that. So I think what we're going to get is volatility, which will then over the next week or two start to build into an uptrend. But until we get that, effectively, we do look like we're in accumulation. We have to accept that was a significant pump and dump from the $41,000 zone. This major area. There's no getting around it. That's a significant level to have closed and crashed from. Pretty much exactly on the money there. And so what we really need to see is what's going to happen over these next few days. Now, there are opportunities with obviously Bitcoin and things. If we start to snake up and move up, there's going to be more opportunity for altcoins as well. We've been talking about this for ages, and I'll make another video on this. I've made a video in the past, so I don't think I'll go on any further. But altcoins will likely follow at a certain particular level. We don't want to get too excited in altcoins at this very moment, because we really need to see if Bitcoin's going to remain healthy and the overall market's going to remain healthy. But there is opportunity for some serious cash to be made on small caps. Not all small caps, but the ones with decent divergence building over 3 days or dailies, or potentially even 4 hourlies. The 24-hour trading volume on some of these things are minimal, which means that if you do manage to get in early enough, when the funds start to flow in, you're at the top of the Ponzi scheme, effectively making the serious gains. Looking at the Dixie here, this is Dixie on the daily, catching up the moving averages, catching up to the price action. We did reach a potential area of significance. It's all the way back over here at pre-pandemic levels. Basically the round 100. Now, if we look at this, it's still a continuation of an uptrend. It's actually pretty good, but I think as a result of the tightening today, the whatever it is they want to do on a rate hike, I think we will likely see a further consolidation on the Dixie before we continue back up again. Because remember, this is just one rate hike. There's going to be between 5 and 7 of these take place throughout this year. So this is an ongoing event, right? It's a continuation of the tightening of the purse strings from the Fed there. So it is just one event out of a potential 5 or 7 throughout this year. So we do have to screw our heads on for a minute and go, all right, well, I mean, we've already priced, we've priced one of these in. How many have we really priced in? Well, effectively, we've priced in 1. So when you stand back and think about what that really means, you think, oh shit, man. Well, does this mean every time we anticipate a Fed meeting, we have to go down and down and down until? Well, it doesn't mean that necessarily, but that's what's happened this time, and it could happen again. I think the whole situation needs to calm down a little bit, and we need to stop counter trading, potential Fed meetings. This is one of the reasons I enjoyed trading crypto in the first place and moved away from traditional markets a few years ago completely, because in the past Bitcoin was not really subject to all this kind of stuff. It had its own thing going on, and the charts are a lot more pure. You didn't have to worry about all this madness. You could look at a chart and trade it on a TA basis alone and not really have to worry about any of these other things. Not anymore though, it's been sucked into the system. So when people talk about ETFs and institutional money and all of this, I suppose has got pros, but the cons are it gets basically absorbed into the system, behaves just like anything else, and now basically what are we all doing? What's everybody doing these days? You have crypto influencers, top big crypto influencers. They'll be streaming the bloody, they'll be streaming the Fed meeting, won't they? With their little picture in the corner going, wow, did you hear what he just said? I mean, no. I know that this is what it's going to be and how it's going to be from now on, but it's a shame really to see crypto, Bitcoin getting sucked into all of that stupid madness, trading it like some Forex trader, waiting for Chairman Powell to say something, anything, and then try and trade upon his, cryptic sentences. So anyway, I've gone off on a tangent, but effectively, like I say, all we're looking for now is volatility, and then we're going to pick a side probably as soon as next week. I think that it's likely to go into an uptrend just based on that 3-day. It looks actually quite encouraging, but until we see it, actually physically, and remember, it's going to be whatever the markets decide, Bitcoin will decide. I don't think Bitcoin is going to run counter to the market. And if we go back to the Nasdaq over here, we have reached yesterday a major level of significance. This is now what used to be, or should have been, potentially a support. Could easily have flipped to resistance. Now, if we break from here, then yeah, we could go up. We could start to recover from here. But again, at the moment, it does look like a bearish retest. There's no getting away from it. Closure there was a nice move, a 3% move. And this could be given up today, and we end up going back down to these particular levels, and that'll take Bitcoin down with it. So Nasdaq goes down another 8%. We could expect a lot more from Bitcoin. So I'm not here to spread hopium. The event is upon us, and we will receive the volatility tonight, and we will see what's going on. But until then, it could go either way, and I think it probably will go either way. That's the beauty of volatility, and we'll see how this ends up. But I'm reasonably hopeful based on the 3-day, but that does take and will likely take a bit of time. I personally think that it's going to recover and alts as well, do some decent rallies throughout the end of this month into next month. Is how it generally looks on the longer term time frames, but that doesn't mean we can't go down another 20% before we do that. So keep your funds at the ready. This is the day that we've been waiting for. We want to see reaction in the market, and then we will take our positions maybe this week or into next week upon careful analysis of how the markets, traditional markets, are looking. Right, thanks for watching. Hope you have a nice day. Take it easy.